Hey Nell, I have a question for you. What potential effect does investing in multiple types of stocks have on your portfolio? Does it A, reduce company-specific risk, B, promote consistent long-term returns, or C, spreads risk across different areas of the market?
All of the above?
Very good. It was a trick question. Today, we're going to dive into diversification in investing, what it means, why it's important, and why having a playlist entirely of show tunes might kill your party. I'm Anna Naries. Around here, there are no bad questions. So be sure to like, subscribe, and ask away. So what is diversification? Put simply, diversification is the practice of owning a variety of investments so that you're not overly exposed to any single one. Think not putting all your eggs into one basket. And there are a couple of good reasons why: risk and return. Spreading out your investments across different industries like technology or healthcare and across different asset types like stocks and bonds means that if one area of the market underperforms, other investments may help offset it and reduce the risk of a big loss. Still feeling a little offbeat? Let's pause and restart with a groovy analogy. Building a diverse investment plan is like building the perfect playlist. You don't want just one song on repeat. Even if you love Taylor Swift, an all-Taylor playlist might start to feel a little one note. That's where diversification comes in. Aggressive bangers, Rihanna, Lady Gaga, these are your high-growth stocks. They get the party hyped, but you don't want to burn too bright and risk fizzling out early. You want to mix in some more conservative crowd pleasers. Journey, Bon Jovi. These are more like your high-quality bonds or cash-like investments. They're typically slower and steadier and help keep the vibe going without giving you blisters. Maybe you throw in one track that is completely different, a remix to the Macarena. Think of that as your crypto or commodities exposure. They can be more volatile, but they don't always move in the same direction as stocks and bonds. These are the songs you sprinkle in for variety, not the entire playlist. The key is having a combination that doesn't all move to the same beat. If most of your investments rise and fall together, like an all EDM playlist, that's what we call high correlation. It can be a risk on the dance floor and in investing, because when one stumbles, everything tends to stumble with it. What you're often looking for with diversification is assets that have low correlation to each other. A healthy mix of investments where some zig while others zag. This may help to ensure your overall rhythm is smoother, even when markets change tempos. That way, you can make gains, but you're prepared for whatever the dance floor demands, whether it's slow dancing or crowd surfing. So how do you build the perfect investment playlist? The short answer is, it depends on you, your goals, your time horizon, and your comfort with risk. But it usually includes a blend of different assets. This is where iShares ETFs can be especially useful. With a few clicks and a brokerage account, you can access ETFs that could get you exposure to hundreds, maybe thousands of stocks or bonds or other asset classes that may enable you to build a diversified investment plan with just a handful of picks. And with an iShares discography of over 450 to choose from, you're sure to find your greatest hits. Just remember, the core foundation of diversification is that it's not about having one song blow the roof off, but creating a playlist that will keep the party going night after night. Investing does carry risk, and diversification may not always protect against market risk. Before you spend your money on anything, even a funky disco ball, you should take a moment to give it some consideration. Building an investment mix that aligns perfectly with your goals can be rewarding, but always do your homework. I'll put some links below where you can get some more information. Remember, when it comes to investing, there are no bad questions. Be sure to like, subscribe, and stay up to date on all the trending financial topics you need to know about. Oh, I love this one. Visit www.ishares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information that you should read and consider carefully before investing. Risk includes principal loss.